All right, welcome to the weekly prep video for the week of July 28th to August 1st. In this video, we'll be taking a look at the weekly action of the indexes, liquid leaders, industry ETFs, each one of them, and then end the video with some long and short setups that I'll be focusing on going into next week. Jumping right into it, QQQ ended the week up 0.9%, up 0.25% on Friday. Higher highs, higher lows. Not doing anything wrong. It is kind of getting wedged up here overall, but the trend is still up. We're still above the key moving averages. Last week, we had a little shakeout day on Tuesday that came into the 10-day. Wednesday came into the 10-day as well, but you could see positive action from there. And then we closed the week right near high of day or high of week. So great action overall. The S&P 500 even stronger, up 0.4% on Friday, up 1.5% for the week. Ended the week with a nice little gap up, open on the low, closed right near the high. And you can see we're well above the previous highs here. So awesome action out of the two indexes there. The growth stocks of the Russell 2000, that's the ticker IWO, um, a little bit weaker overall. On Thursday, we had a gap down, closed on the low of the day, right kind of in between the 5 and the 10-day moving averages. On Friday, lower highs, lower lows, bounced at the 10-day moving average, still closed over the 5-day. So positive action on Friday of 0.56%, ending the week up a half a percent. I don't love the gap down, and I also don't love how quickly we retested the 20-day without making meaningful highs again. Typically, when you get that, it's a sign that the risk on it is starting to taper away. We are starting to see a lot of the speculative names kind of come under distribution. We'll see a lot in the short setup part of the watch list, but overall, just a couple things that I'm watching. Do we hold the 20-day moving average on a closing basis? Extra positives if we hold the 10-day and the support gap. And a third positive that I would look for is a close over the gap down zone from Wednesday into Thursday. If we close over that, I think we could get just another leg higher until some consolidation. Next, we have ARKK, kind of similar to IWO, had that gap down Wednesday to Thursday, tested it on Friday with good action overall, higher highs, higher lows, closed over the 5-day moving average and closed into this resistance gap, ending the day up 1.3%. Ideally, we get through that resistance gap sooner rather than later. Overall, though, I think ARKK is acting super well compared to or given that Tesla was one of their main holdings in a gap down after earnings, and this didn't even test the 10-day, didn't even come in to touch the 10-day. Got close on Friday, but overall, very strong action out of that group. And then IBIT, this is just tracking Bitcoin. So I had a gap down. I know Bitcoin trades 24/7, so it's not actually a gap down, but follow through to the downside, lower low in the pullback, but did kind of bounce off the 20-day right around that area. So what I want to see is that area hold on any more kind of pullback. I want to see that 20-day moving average and today's low or Friday's low, whatever, hold, and then we can build from there. If we break down after that point, it's a little bit concerning. We could just be going through a breakout retest, but given how quality the base was, how we had like a double bottom base in the handle, like shorter term base in the handle, and we how we broke out on volume, I wouldn't expect to see this like immediately roll over. And I'm not saying it's done that yet. We've just put in another lower low in the pullback. But if this gets violated, this low gets violated, then I'd be concerned about the group. Next, we can take a look at the liquid leaders. We'll sort that by price percent change for the week. GEV, the star on the list, after they were up, what was it, 14.7% on earnings on Wednesday. Nice tight action on Thursday, followed it with a gap up and strong close on Friday, up another 3.4%. Let me move this a little bit. New all-time highs for GEV. NVIDIA also new all-time highs, higher lows on Friday, even though we closed basically flat, ending the week up 0.6%. Not a lot of expansion there. We had some distribution into the 10-day moving average, but then followed that up with a gap, two gap ups, and then tight action at highs, which is very constructive action. SMR kind of new to the list. It's been a stock that I've been tracking for a while. I think it is one of the leaders in the nuclear theme, along with LEU. Great action overall when it pulled back to the 20-day in the support gap. That's why we draw the support gaps, because when you break the 20-day or you break the 10-day, a key moving average, some people will just take it off their chart. But if you have like a secondary layer where price gets supported, you can manage your risk down there even tighter. Then when it does get through the moving averages, everyone's starting to buy back up the stock, and then you could see some nice acceleration to the upside. This week, up another 2.8%, 2.9%. Came into the 10-day on that shakeout, gapped up on Wednesday, and then strong action Thursday and Friday, not doing anything wrong. FUTU, little gap down. It trades on a different exchange, so the gaps for like Chinese stocks like FUTU not as important for me. I still draw them on some of the stocks, not all of them. Ideally, just want to hold that 10-day moving average. I do have a position in this, and Friday's action is not ideal, down 1.95%, but given the base that it's breaking out of, I'm going to give it a little bit more room to work. RCL, Royal Caribbean, awesome action off the 10 or off the 5-day moving average and support gap on Friday, ending the week up 0.75%. Basically just trading sideways after that nice shakeout on Tuesday. You can see how Tuesday's shakeout immediately got supported at that gap zone after undercutting a key moving average, and that's why we draw the support gaps. Robinhood, this was an additional trade for me this week, up or actually down 4.5% this week, but up 2.8% on Friday. Perfect shakeout of the two support gaps and the 10-day moving average on Tuesday to start your position. I added to it on Friday through yesterday's high or through Thursday's high. Great action, just kind of shaking out, getting super tight. Undercut the previous low on Thursday, then closed at the 10-day, and then we followed through to the upside on Friday. We'll see if this has more steam before earnings. RBLX, couple confuse or not confusing, but a couple concerning things on the chart here. After a big move, after a 100% move and a quick consolidation, we started to accelerate higher. You can see the daily ranges of these bars really start to expand. Typically, when that happens after a 100% move, it marks the kind of end of a shorter term uptrend, not the end of the run overall. But that kind of volatility at a later stage in the move usually welcomes in volatility to the downside as well. And that's kind of what we saw last week. We had a gap down on Tuesday, gap down on Wednesday, uppercut and failed that on both Thursday and Friday. So this gap zone is now a resistance gap. We have proof that sellers are stepping in at this area by the end of the day. So ideally here we close above the resistance gap, and then maybe we can have another leg higher before any kind of correction. But now we have two gap downs. We have a resistance gap. If we lose the 10-day moving average, chances are we're going to consolidate and pull back until earnings. That was also down 4.5% last week. Coinbase down 6.7% last week. This is the first week where we had the indexes at high, but a lot of the leaders actually pulled back quite a bit. Coinbase had a gap down, tested it on Thursday, and then followed through to the downside on Friday. Still tight trading action on Friday and right at the support gap. So that could be an area to manage risk against. But Coinbase has earnings coming up this week. So for me, not going to be a trade trying to get in right before earnings. And then RKLB, Rocket Lab, awesome reaction after undercutting the 10-day moving average on Tuesday and the support gap. Again, this is why we draw the support gaps. They're great entry tactics once you study them. Then we rallied up, pulled back, and tested the 10-day and support gap again, which held on Friday, even though we were down 1.45% and down 7.7% for the week. Before we jump into the ETFs, I do want to cover the NAAIM exposure. I covered this on Thursday's video because that's when the numbers get released, but we'll just quickly go through this. Again, this is the active investors' exposure levels. And typically at that 95% or higher threshold, you start to see pivot failures, breakout failures, distribution that's not just a 1-day kind of pullback, but actually like a sustainable pullback. And happy to see that exposure levels have actually been dropping the last three weeks. We went from 99, and we actually did see a couple distribution days. We saw a couple gap downs when we got to that elevated number at the beginning of July. But then we taper down to 86, then 83, then 81, all while the indexes are running higher, making new highs. While leaders, a little bit of distribution this week, but overall, leaders are still acting great. Speculative names, we've had pockets of strength there. It doesn't seem like every single speculative name is going straight up right now. Um, but now you have positioning only at 81%, meaning at some point, people, if the price continues to rise, people are going to throw in the towel and be forced to go long. And given how far we've come off the bottom and how a lot of these growth stocks are pretty extended in the short term, when we get this number back up to 99, um, then I would be looking to sell a lot of things into strength, looking to start shorting some of these extended names and playing the downside move, but we're not there yet. We still have 19% of money on the sidelines, and this number can go over 100%. It can get, I think, to 118 was the maximum. So overall, still money on the sidelines to come back into the market if we continue to squeeze higher, and that really does create that kind of blow off top potential, that squeeze potential in the market because there's still people not participating when the market's at all time highs. Also, want to jump over to Earning Whisper and just show how many earnings that we have next week. So before you put on a trade, check when they're reporting their earnings. You don't want to be putting on a bunch of exposure like right before earnings. Typically, I won't trade a stock and I won't hold overnight a stock that has earnings within the next like 2 or 3 days. Robinhood reports on Wednesday, and that was kind of buying on Friday or adding on Friday was probably the last day for me to do that. But overall, like tons of important names reporting kind of in the middle part of the week. For me, I'm really interested in SoFi. Obviously, Meta, really good cup and handle being formed. Microsoft, right at highs in the second largest company in the world. And then Robinhood, Carvana, a couple growth names to watch. And of course, Apple and Amazon on Thursday after the close. So make sure you know when the stocks that you own have earnings and any stocks that you're potentially going to buy or short if they have earnings coming up as well. Cool. Next, we'll jump into the industry ETFs. We'll also sort that by price percent change on the week so we can take a look. And home builders, ITB, the leader of this week of 5.66%. Really good action off the lows. Once we had the moving averages kind of flatten out, and then we had the highest volume in over a year on July 1st here, the trend has changed. We've gone from downtrend to kind of like a basing phase. Now, short-term wise, we're in an uptrend. We're above the key moving averages, the 5, the 10, the 20, the 50. All those moving averages are in the right order. We did get rejected by the 200-day, which is in a downtrend, and the resistance gap up at 103. And that makes sense. Like coming off of the low, you don't tend to see clean price action. You tend to see like big moves on volume, then a lot of volatility on the downside on less volume, then gap ups, stuff like that happening. So the fact that we pulled back sharply for 2 days on lighter volume and then undercut the 5-day moving average, but closed well on Friday gives me more hope that this is actually starting to put in a bottom and then we can start to trend higher. But we'll see. I'd be using the 20-day moving average as kind of my line in the sand for a higher low pullback. GDX, gold miners, great action. Came into the support gap on Thursday, held it both Thursday and Friday, then rallied to close over this little gap down from um, Wednesday into Thursday. Overall, one of the, I mean, the market's been so hot, you could say anything's kind of like a leading group. But for people that are more risk off, I think gold is potentially like a good play. Continues to rise, holds the 5 or 50-day moving average. I really thought gold was kind of toast after, like we made new highs, but not true progress. And then we started pulling back to the 50 multiple times. But instead of testing it 3 times and then breaking down, we broke to the upside, had a gap up wedge pop, which is always bullish to me, and then supportive price action at the 20-day. XLV, this is the healthcare sector, has been one of the worst sectors or groups in the market, and maybe potentially putting in a little bit of a base here. We now have the key moving averages flattening out and turning back up. We have the order 5, 10, 20, and 50-day in the right order. And we're starting to see volume, the higher volume days come on up days versus down days, which is starting to show some accumulation. So overall, still not a group that I'm like really focused on, but it's nice to see that some sellers are getting exhausted at this point down here. ROBO, great action. This is one of the bases that I've been watching for a while. Multi-year base from 2022 to 2025, kind of midway. So 3.5 year base, now breaking the upside. This is the robotics ETF, and really a theme that I will be focused on even after like a pullback in the market. NLR, nuclear theme, up another 3.2%. This has been just a really easy trade to hold. Came into the 20-day and that support gap, held that area, then popped through those key moving averages, and since then has just been climbing nicely. The one distribution day we had here was after a gap up, but we still closed over the 5-day moving average. Quick test of the 10-day, and then continued forward from there. XME, this is metals and mining, holding the 5-day moving average on the little 2-day pullback that we've had so far. Good action on Friday. End of the week up another 3.2%. TAN, the solar ETF, kind of going back to what I said with ITB, is when you come out of your stage one base, you should still expect a lot of volatility. And with solar stocks in particular, we had this bad news that the tax credits weren't going to be included in the bill. We had a gap down, but instead of following through to the downside, we actually immediately reversed, put in a higher low against the 50-day, and then ripped higher. This week we had ENPH's earnings, which is one of the main components of this ETF, and they were down like 14%. It's probably the weakest solar stock out there. And even though that happened, the solar ETF just pulled back to the 5-day on lighter volume. And then on even lighter volume, came down, tested the 10-day moving average, and hammer candled off that into the 5-day and held the support gap area completely. So to me, this is just breakout, consolidation, push higher, retest of that area, and hopefully continues higher because I have a position in NXT, which is reporting this week, and is one of the solar stocks that I'm focused on. So end of the week up 3%, even with bad ENPH earnings. Another sign that bad news is getting absorbed or at least supported in that group. XRT retail ETF, little pullback second half of the week, but good gap up on Tuesday. Still holding the 10-day moving average on the lows, closed at the 5-day, not doing anything wrong, up 2.6% this week. XLB, this is material sector, really quality chart, little double bottom base here. Kind of pulled back to the breakout retest on the 20-day moving average, got supported at the 200-day. Now we're right back near highs. So just another group that's really working in the market. XLF, financial sector. I really, really liked this base. Huge shakeout, obviously, in April. Then we rallied up, had some relative weakness compared to other groups, but in a bull market, you tend to see rotation from group to group to group as stocks that were extended just pull back on lighter volume or even trade sideways if they're super strong. And then you see that money rotate from the extended names, extended themes into like secondary groups, and then you get that rotation higher. XLF is a perfect example of that. Had some relative weakness through June, and then really started to outperform in July. Quick pullback to the 20-day, and now we're right back at highs. So this is a theme that I'll be focused on probably next month as well. XBI biotech ETF, really the main focus for me on this is, can we get through the 200-day moving average and this resistance gap pivot through that area? And this could be another group that gets that money to rotate in. And biotechs, when they do get going, they have the ability to really run in the short term. So we'll be watching that. Good action off the support gap below the 10-day moving average on Friday, and then closed above the 5-day. FDN, this is the Dow Jones Internet Fund at new all-time highs on Friday. So can't be bearish there, up 1.5% this week. IYT, transportation ETF, continues to uppercut and fail this resistance gap. We have two gap downs here, so not one of the stronger groups in the market. Uber is one of the main stocks within that group, and that's been really like kind of weak. We can just actually go to that chart. Um, no, not Unity. Sorry, Uber. Pulling back, there is a little support gap here at the 50-day moving average, which is held. So overall, as long as we hold this area, the 50-day, I think that could be a good risk reward spot for the group. But because we have these gap downs, I never want to buy something on strength if it has multiple gap downs. I always want to buy on a shakeout or undercut. So we'll watch this area by the 20-day moving average if that can hold support. IGV software ETF, new all-time highs, not bearish action at all. If we start to see some gap downs or drops through the 10 and the 20-day EMAs, that would be room for caution, but we're not there yet. XLE Energy ETF bounced at the 5, the 10, the 20-day moving average, closed middle part of the range on Friday, up 1.3% this week, but still not really a group I'm focusing on, not really doing much of anything. XLY, consumer discretionary ETF, gapped down on Thursday, came into the 10-day moving average, then gapped up on Friday and closed back over the 5-day into the resistance gap, which is the type of action that you want to see after a big gap down like this. You want to see immediate reaction up where that is getting supported. Whether this puts in a lower high and then rolls over or just rips into new highs, we'll take day by day. I don't have a crystal ball, but I do like the supportive action at the 10-day so far. ITA, this has been a leading theme in the market basically all year. This is the aerospace and defense ETF. Really trends nicely. 5-day on the uptrends, pull back to the 10-day, gets supported, holds the 5-day, pull back to the 20-day. You can see some wicks off there. Earlier this week, I thought that this might be coming to an end because we had a gap down. We lost the 10-day moving average, the first close under the 10-day in quite a bit. Um, but exactly what you want to see after a stress test, after a gap down or some selling, is immediate buying. And that's what we got. We got a gap up, pop through the 5 to 10-day moving average, closed at a new high, right? Just the next day, and then continues to trend higher. So until we see like a gap down and then follow through to the downside, this theme is in an uptrend and we shouldn't argue with that. XLP, consumer staples, just a mess of a chart. I don't really focus on this one. CIBR, cybersecurity. I think there's some good risk reward spots in names like ZS and CrowdStrike. They do trade kind of funky, not my favorite group to trade. But we had this just 2 distribution days, Thursday and Friday, 2 weeks ago, supported at the 50-day moving average, rallied up, potentially putting in a higher low here, got tight on Thursday, then followed through a little bit to the upside. We'll see if we continue to follow through or if we need to test the 50-day again before this is ready. KWEB, China Internet ETF. One of my main focuses over the last couple of weeks was getting exposure built up into here. We finally broke out on good news with NVIDIA being able to sell chips to China. Since then, we had some good days trending over the 5-day. Friday was a little bit weaker. We gapped down, but bounced off the 10-day EMA and then closed well in the daily range. I'm really just going to try to use the 20-day moving average to stay in my position. IYZ gapped down on Friday, ending the day down 1%, basically flat for the week, holding that 10-day moving average and support gap. This is telecommunications, not my favorite group, not really a main focus of mine. PEJ, leisure and entertainment, made new all-time highs on Wednesday. Then we gapped down on Thursday, closed at the low, but good action on Friday, opening at the low, closing at the high, back over the 5-day moving average. So we'll see if we follow through to the downside or the upside here. Not a main focus of mine. BLOK, blockchain or data ETF. A little bit of weakness overall with Bitcoin weakness, with Robinhood's weakness and Coinbase, but still holding the 10-day moving average. Even a pullback into the 20-day and support gap here, I think would be fine overall. If we start to accelerate through that, then I would be very cautious. Semiconductors gap down on Tuesday, potentially just a lower high here. I'm not quite sure how to feel about the action lately. Lower volume the second half of the week as we put in this lower high. Ideally, we get over this gap down zone quickly. Otherwise, if we follow through, we have like a pretty clear line in the sand at the 20-day moving average and where all these lower wicks got absorbed. So if we close below where those lower wicks are, then we know that those buyers supporting that price action is gone. And after a big run like this, After a gap down, we're starting to see some evidence that there's weakness in the group, down 0.97% last week. So we'll see how that 20-day moving average and support gap zone holds. And then the weakest group of the week was XOP, oil and gas exploration, down another 1.1%. Still under the 200-day moving average and still just a choppy mess. So for me, it's not a group to focus on. All right, jumping into the long and short setup. First, we'll go long. COUR had the highest volume in over a year on Friday with earnings gap up 36%, closed right at the high of the day on massive volume. And if you zoom out, you could see over a year-long base, and now we're gapping up on the highest volume in over a year. To me, that's a must focus on because when you get price action, churn, big sell off under the lows that immediately responds to that area. That shows me that this was the capitulation. Now we got a big rally, we consolidated, and now we have earnings proof that institutions are trying to soak up this stock. So uh, if we get a little gap up and then a retest of the HVC, which is the highest volume close, so the closing price on Friday, 1238, that's going to be buyable for me. Or if we like open low, come back through HVC, then my stop would be the low of the day. But this is one of my kind of main focus names, given the volume, given the base. We'll see if we can play this for a larger move. Joby, this is purely a performance booster play. We've already made a massive move up, but instead of breaking down, we're trading really tight above the 5-day moving average and closing well. We are at that point in the market where things are extended, but positioning is still not at 100%. So there is a possibility that we have that blow off move until everyone gets crazy and everyone's forced to buy all the risky stuff. And eventually that'll happen and we'll get the sharp sell off and some basing. But this is a name that the best stocks, the best kind of speculative stocks that ride the 5-day moving average and then flag out and hold that 5-day, they can have like big ignite bars out of that area. So that's something that I'll watch as like a performance booster, but I'm going to be using like a 1 or 2% stop, just trying to play the breakout with a 1 or 2% stop if and get my stop to break even right away because it has the possibility of taking out the highs and then reversing, and then that's actually probably a good short because you would have a breakout failure after a pretty large extension. So kind of a stock that I'll be watching on both sides of the coin. I'll play the breakout because we're in an environment where these things are still working and there's positioning to be had. But if we break out and fail, I would be fine with flipping short and then playing that to the downside. Toast, one of the more annoying stocks overall, but I really like the base, double bottom base here. Then we really annoyed people this entire way. Anyone who tries to buy this on strength gets stopped out like immediately. And that's why we're not going to buy it on strength. We're going to buy it on weakness. Watching for a undercut of the 10-day moving average and support gap zone at 46.50. Nice little shakeout. Then we can manage our risk against the 20-day moving average. But this is an IPO that is everywhere. Like every restaurant that I go to has Toast, is using Toast for their sales. So just watching that area at 46.50. MP, kind of a similar setup to Joby. I think MP probably has a little bit more juice than Joby does at this point. But really good action overall, like massive accumulation here from 19 up to 60. Now it's surfing the 5-day moving average. You could say it's wedging up here, and I wouldn't argue with that. But the best names hold the 5-day moving average when they flag. This has been doing that. If it breaks to the downside, if it takes out like yesterday's low or Thursday's low, that would be my stop. But just trying to get in through, I would say just like an opening range break. If we get a gap up on Friday, try to play that for a bigger move up. I took this on Tuesday on the undercut and reclaim of the 5-day, and then I added a little bit on Wednesday. I don't think I'll add any more on Friday because I've got good positioning that even if it stops me out at yesterday's or at Thursday's low, it'll be kind of like a break even trade. Maybe I'll lose a couple pennies. But I do think it's one that can have one of these like ignite bars where it goes up another 15% in the market that we're in. AVAV, first thing you'll notice is we have a resistance gap. We have a gap down that we've rallied into, but we can't close above it. So whenever we have those overhead gaps, not something that I'm buying on strength. I want to buy on a shakeout. So just looking at this gap zone under the 10-day moving average for kind of a potentially higher low area here to manage risk against the low of the pullback and the 20-day moving average. This is in the aerospace and defense theme, which we just covered was one of the leading themes in the market. ALAB, very similar to Joby and MP, a stock that frustrated everyone. Anyone who tried to buy this on strength was super frustrated in here. Probably got stopped out through the 50-day, the two tests of the 50-day. Those were actually probably the areas to buy because you had multiple support gaps there. You had key moving averages. So once a stock like shakes you around more than twice, for me, I just kind of understand that that's the character of the stock and that buying it on a breakout, sure, it could work, but you're probably going to just frustrate yourself more. Now that we've had this change of character, there's huge volume coming in. We're done with this consolidation area. Now we're surfing the 5-day moving average. You can see the character is changing a little bit. We traded super tight on Thursday and Friday, right at the high volume close. The 5-day moving average is catching up. This is one that I'm just trying to take through today's high or Friday's high and then play versus Thursday's low or the 5-day moving average. So when we're basing and you have evidence that the stock's character does not do well if you're buying on strength, like failure, 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 don't try to trade it on a breakout. Once that character does change and you get massive volume that comes in, and then we start to trade tight, that's a change in character that now I can try to trade it on a breakout as a performance booster. TME, this is a China stock. We've covered the Chinese theme over and over again. But TME, massive, massive base from 2021 to 2025. We broke out of that in May on a earnings gap up. And since then, it's been a really nice stock to just trade along the 20-day EMA. Got a little bit extended, and now we're pulling back. I'm just watching for a 20-day EMA test at 2064. That would be also kind of like a breakout retest as well to add to my position. RBRK. This is a name that I am not sure if I'm going to actually trade it, but it's going to be something that I have alerts on above. One of the software names that was the first off the lows, first to make a 100% move. And then from there, we started getting extended, gapping down. Now we have like 3 or 4 resistance gaps. But the price is getting supported down here. So a couple different ways to play this. The way I'm watching is a shakeout of the lows and then a recapture of the low of the pullback. That would be my buy point. Then I can manage my risk against that low. And then if you want to add to it, add through the 20-day moving average if we close above the resistance gap and the 20-day. If we get a gap up and pop through the 20-day, that could be viable too. But just given where we're at in the market, kind of extended, and we have evidence that sellers are coming in and forcing this lower, I would rather play from a spot of weakness and then add on strength where I already have a profit cushion to play the stock versus trying to play like a break through the 20-day moving average. I think that can work, but tends to be a little bit tougher. IONQ, I think the quantum theme as a whole is kind of at a do or die spot. So I have 2 quantums on the long side, one on the short side. I think theme wise, it's just at this do or die spot. So you could play it either direction and I wouldn't argue with you. IONQ, awesome base here. VCP, like big cup, handle, whatever you want to call it. You can see volatility is contracting here. Now we have a higher low put in. We're surfing, like we're right on the 20-day moving average, a little bit of a weak close on low volume on Friday. The only way that I would play this is a gap up and then take out of Friday's high. And then I would be placing my stop at the 20-day. So really tight risk exposure there. But this is a name that's made a massive move from 6 up to 50. And then instead of completely like breaking down and continuing to trend down, we rallied back and put in this VCP pattern. So we'll see a gap up that takes out Friday's high. That's going to be viable versus Friday's low for me. Let's just jump over to the other Quantum name RGTI, another name that's had a massive move, 74 cents up to 19. Instead of breaking down and continuing down, we just base out. This really reminds me of SMCI back in 2024 or AMR back in, I think that was 2023, maybe it was 2024 as well. But stocks that make massive moves and then just go sideways for multiple months and then get going again. So I do have a position in this. I bought it on the gap up on the 16th, and I'm trying to be patient with it. Came into the 10-day, bounced, came into the 10-day again. So now this has the potential to be a lower high, and you could argue, hey, this is just like fooling the last people to buy, and then we're going to roll over. I wouldn't argue with that if we actually see follow through to the downside. But this is a name that, because of the massive base, because of the theme, because of the market we're in, if we get a gap up that takes out the high from Friday, I'll be adding to the position and trying to play this for like a true base breakout. And hopefully things get crazy, right? Like you can say a market's crazy and sound smart and not make money, or you can participate in the craziness with risk management. And then if you get stopped out, you get stopped out, you start reducing your exposure. But I wanna be in the markets that are crazy, and I want to try to play some of the trends that make you feel a little crazy playing them. PGY, software name that's made a massive move already. This is one I'm probably more focused on in the second half of the week. If we could pull back into the 10-day moving average, the HVC, the support gap right at $30, that's where I would try to get involved and then manage my risk with like a 2 or 3% stop there. But massive move off the lows. We did come right into the previous resistance, and that's why for me, I would rather play this on a pullback to a key moving average and key zone here versus trying to play on strength. But that is just me. And then SEDG solar stock. Like I said earlier, like when you're coming off the lows of a base, you don't tend to get very clean uptrending action. So the fact that like this stock fell from $300 down to $10. So there's going to be a lot of people like trapped at higher prices. You're going to get some non-clean action. So I don't want to be buying on strength. I want to be buying stuff like that on weakness. And with ENPH's earnings earlier in the week, we got that weakness. And we got that weakness through price down 8% one day, down 2% the other, down 4% on Friday. But look at the volume on this pullback, like extremely light volume, really just coming back into this breakout retest and the support gap zone. So this will be a focus of mine on Monday. If we could take out the low of the support gap and then reclaim that area, then I'm managing the risk against the 20-day moving average. And I've got potentially a nice shakeout on low volume just because a different company reported earnings in a theme that has shown that it has likely bottomed in a stock that after a very, very long downtrend and long basing process, we're finally starting to turn up with all the key moving averages in the right order and all up trending. That's a spot that I'm willing to risk 2 or 3% at. Next, we'll go to the short setups. First, we have AFRM. This one you probably scratch your head at. I'm just trying to put a couple of these like growth names on my radar to see like if we start to see these breaking to the downside, there's more evidence that like momentum is drying up in the market. And I've always done well shorting AFRM. So to me, it's one of the stocks that I'll be focusing on the short side. Had a nice big rally, but then we started to see some warning signs pile up. Big reversal on the 8th, close at the 10-day moving average, a couple tight days, false move higher, and then a loss of the 20-day. Eventually undercut the support gap perfectly on the 14th. So again, great action at the support gap, rallied up, put in a lower high, and then had another kind of distribution day back through the 5 and 10 days moving averages. Some good supportive action. You see lower wicks through here, and now we're at a do or die spot. I think you could say this is a long setup through Friday's high. I wouldn't argue with you. But then through Friday's low, I think this is like a secondary lower high. We'll get the wedge drop, and then we have some evidence of momentum drying up. We would use Friday's high as the stop there. QUBT, this is the quantum name on the short side that I'm most interested in. We have the big base, but instead of putting in higher lows on the right side of the base, we're starting to put in lower highs and lower lows. Um, we took out the previous like rally point highs on the 7th, but then immediately reversed, lost the 20-day, lower high, lost the 20-day on the 21st. And now we're getting really tight price action, but starting to wane down a bit. There is this major support gap, and you have the 50-day moving average. But this is the first quantum name that I would look to short if we take out like Friday's low, maybe do that as a balance of RGTI position. But I think the group is at a do or die spot, and I always want to be shorting the weakest names in the group, longing the strongest names in the group, and then whichever way the group breaks, I'll get stopped out of my long or shorts and then just play the trend from there. ACHR, this is a name that I owned on the breakout on the 15th and then had to give it back on the 21st when we lost the 5-day moving average on volume. Since then, we gapped down twice. Friday, we uppercut the resistance gap, failed there a little bit, and now we have tight price action to manage risk against. Morning strength into the resistance gap could be a short spot on an uppercut and fail of the 5 and the 10-day moving averages. That would be your tightest risk spot, so you could size it up a little bit more. But then really, I'm looking through Friday's low, through the 50-day moving average as like a false move here, and now we break to the downside. NEGG, I got stopped out of my short on Friday and then added it back at the end of the day. This was on the short watch list if we gapped down on Friday. Instead, we gapped up, took out the previous day's high, so I got stopped out right at 32, 24. At least that's where my stop was. It's a thinner stock, so I probably had some slippage there. But once again, it uppercut and failed at the resistance gap zone with a lower high. And this is a stock that's made a move from $3 up to $50. And if we look back at QUBT actually and go back into December of last year, very similar action overall. We had big multi 100% move from 72 cents up to 26. And then we gap down at the highs. We rally back up, failed right around that area, not exactly in the resistance gap, but failed right at that area. And then later on, we had another lower high kind of squat day, inside day, and then we just completely fell apart, going from 17 to 6 in 4 trading days. So this is the type of setup that I'm watching for. And we're kind of getting that to play out with NEGG, where we moved from $3 up to $50. From the highs, we gapped down to start. We actually had a secondary gap down and then two lower high uppercuts. So if we get a tight day on Monday and then we gap down, that would be my trigger to really hammer the position. Right now, it's like a 5 or 10% position, but something that if momentum dries up in the market and we have a setup like this, we have evidence in the past that these moves can make drastic moves to the downside, or these setups can make drastic moves to the downside. So I'll be hunting that this week. Probably one of my main focuses this week. Open Door had all the craziness last week from 52 cents up to $5. Lower high, gap down, uppercut and fail the resistance gap like perfectly. Go back and study this chart if you want to like learn how to short at resistance gaps. And then on the flip side, acted perfectly at the support gap down here. So now I'm just looking for a lower high to be put in. Maybe we take out the resistance gap and like end up putting in a lower high at 350. I'm going to be a little bit patient with this because you have volume drying up and you had action at the support gap. So kind of the flip side is like I want to be shorting like into well, I want to be shorting a powerful move up, but once it starts to show weakness after we've already seen supportive action at a gap zone. So probably one in the second half of the week that we'll cover in later videos. GRRR, I think this is a really quality setup to the downside. One of the speculative names that didn't quite get going like the others. Gap down after a big move up, gap down after a big move up, tight action at the key moving averages. Then we fall through the 50-day. Now we're getting tight action at those same moving averages with them overhead. So just looking for a breakthrough Friday's low as a short. Stop would be the 5-day moving average. LAES, very similar setup, lots of gap downs, didn't quite rally up to the previous highs in the cycle. And we did bounce at the support gap down here. So really want to see this taken out overall, but maybe like a day or two rallying up, and then we can manage risk against like the 20-day or so. Set up for later in the week. ARQQ, kind of similar with AFRM, where it's like a growthy name that um, like hasn't done too much wrong just yet, but we did uppercut and fail at the resistance gap after making new highs or right at previous highs. We saw sellers step in once again, push this lower. Then we had follow through to the downside to the 20-day, bounced there for 2 days, and now we're starting to wane again. So looking for a breakthrough Friday's low, the 20-day moving average is my entry, and then stop would be whatever the high of the day is. And you could argue a breakthrough Friday's high would get this back going. We've seen supportive action at the 20-day the entire time. Can't argue with you there. Just using this as kind of a test for the market. CEP have made good money shorting this overall, just a junk stock that made a massive move from 10 to 55. Lower high, lower high. I think this was when we put it on the short watch list at like 45. Faded all the way to 25, put in another lower high. One, two, three, four gap downs in the last 2 weeks. Really tight price action on Friday, so we're just looking for a flush through Friday's low. And then BMNR, another name that you could go long or short depending on the price action that we got, but from $4 up to $160, churned for 2 days, suckered in a ton of retail money right at highs. And then you just see like the with that churning at highs on pretty high volume, once you get the kill bar here down 40%, it's not just one day and then we start to bounce. There's so many people trapped at these higher prices that every day you're seeing open near the high, close near the low, open near the high, close near the low. We open higher, close lower. Like I think this was like 12 bars in a row that we saw opens higher than the close. Thursday, we actually saw a push that got rejected at the 5 and the 10-day moving average, and then we resumed the selling on Friday with lower highs, lower lows. Just through Friday's low, let's see an accelerated down move there. Through Friday's high, I would not try to short like a pop into strength. I would want to short this on weakness to really avoid a squeeze here because I mean it did go from 140 what was it at high 160. Did go from 160 down to 40, and we haven't continued lower, but we've seen a lot of churning of volume here. So one that could go in either direction. I want to be buying with the trend, or I want to be putting the position on with the trend. So if it's breaking down, I would short. If it's breaking to the upside, I probably won't go long this setup, but you could probably manage your risk really well with something like that. So that's going to be the weekly prep video for the week of July 28th to August 1st. If you guys enjoyed the video, please leave a like and subscribe to my channel. I do daily recaps Monday through Thursday, and then this weekly recap and preparation video. I'll be putting these out on Saturday going forward. So appreciate it. Have a great weekend, and I'll see you guys on Monday.